Alright, hello everyone. This is my macroeconomic analysis of Austria. A little bit of background information about Austria. Since World War II, they have sustained economic growth. In the entire 50s, their average growth rate was 5%. It began to fall slowly until about 1997, when they were transitioning into their new currency of euros, after becoming a new member of the European Union in 1995. These new euros came at about 1999. So with joining the European Union, they were able to get all kinds of advantages as well as some disadvantages in joining the euro. The Central Bank of Austria is that. I'm not going to try to pronounce that. They contribute to a lot of the monetary and the economic policies in Austria, as well as the other European or Euro areas. Their current economic status, they are the 27th highest GDP in the world, with approximately 446 billion US dollars in 2019. Over the past few years, they've seen declining GDP growth. From 2018, they had a percentage of 2.4 growth, and last year they ended with 1.6% growth. They're still growing, but not at substantial rates. Also, their expected growth for this year due to coronavirus is negative 7%, which is bound to either go lower, or if they're lucky, it might not go as low. And then back in 2021, they're going to have an increase of a drastic amount, back up to 4.5% growth. For breaking down their GDP, 50% of it, 52% of it is consumer spending, and then following that they invest a lot in 25%, and their government spending equals out to almost 20%. But as you can see, their net exports are negative, which means that they are currently in trade deficit. Their unemployment rates are 4.4%, which have been slowly rising since 2018 and expected to go up even more whenever they get the official rates due to coronavirus, since the country actually did go on lockdown for it. Even though they weren't badly affected by it, they still had to shut down parks and restaurants and everything that we did. The inflation rates have been following most of the euro areas, and for theirs specifically, they have a 2.1% 2018, and it's been declining to 1.5%, and then it's expected to get to 0.44% by 2020, the end of 2020. A couple of their weaknesses and possible threats to their economic status. Austria has its trade deficits, which are getting worse as coronavirus is making exporting a lot less optional. Their main trading partner is Germany, who takes about 30% of all of their exports, and about 70% of all their exports go to Euro nations in general around them. Italy being the next highest at 10%, and so on and so forth. So with Germany and Italy, they have been declining in their demand for foreign goods, so Austria is trading exports has been declining for quite some time now, and it's expected to keep going lower and lower as coronavirus is affecting everybody's exports and imports. Their manufacturing industries is mostly export-based manufacturers, so those have been slowing down as well due to all the trade deficits and not being able to export much. So many companies are either going under or removing more employees, paying higher taxes. So that's also contributing to their unemployment rate rising. This Austrian Trade Union Federation, or OGB, is a major weakness for them, considering it is the only trade union in Austria, and it separates into different sectors. I think it's 7 different sectors, which are for agriculture, manufacturing, services, etc. And they control a majority of the employees in Austria. The unemployment rates due to the trade union have been rising, as well as wages are increasing very slowly. Taxes are increasing for employees and employers, and their current taxes in Austria are about 6th highest among the Organization of Economic Cooperation and Development, or the OECD countries, which is a majority of the countries in the world. Also, the trade union for long-term unemployment has been rising rapidly. We can see from their trade union that not many people are able to get new jobs or transfer jobs or even find any source of employment due to high taxes and low wages. Also, coronavirus is a major threat for just about every economic status of every country right now. Coronavirus is increasing the unemployment rates here in Austria. They're raising the money demand, so people need more money in order to sustain their normal lifestyles. And as stated before, coronavirus is supposed to affect their GDP by giving them a negative GDP growth rate of 7%. Moving on to some possible solutions. Austria, if possible, should attempt to control the money supply, though the money supply is controlled by the European Central Bank, since they are now using euros as of 1999. The idea is that they should raise the money supply to match the demand if possible, and this will allow for more consumer spending, since that has also been slowing due to coronavirus, and more lower investment rates, or interest rates, my bad. For their tax rates, they should definitely lower their tax rates. About 56% of all employees and employers actually receive a tax rate that gets rid of a majority of their income. Their average income as of 2018 for most employees was around 51,000 euros, and a majority of that take-home income was about 36,000 euros. So big chunk of their salaries are being taken out in taxes, which is also making consumer consumption decrease, and the housing markets are also decreasing, so people aren't buying houses much because one, they can't afford it, and two, the housing market prices are increasing, so trying to get a house doesn't really make sense when the price of the house is higher than you can afford. For their exporting, Austria needs to look towards more opportunities. This will increase their GDP, as well as manufacturers in industries that are feeling the effects of the decreasing demand from Germany and Italy and the rest of the European nations around them. When they improve their exports, chances are most of the employees and manufacturers will be able to hire more, decrease the unemployment rate, and possibly even pay their employees a little better to be able to counteract the housing market. So also, they will allow industries to increase production, and in doing so, they increase their exports with hopefully more and more nations. So overall, the GDP in Austria over the past few years has been pretty decent, but they can see improvements in their net exports, and consumer spending needs to go back up to a better level to increase their GDP growth, and they have to be careful of COVID-19 with the growth rates, considering they've always been a pretty sustained economy. COVID-19 is going to drastically affect that, and they need to be ready to supply money if possible. After COVID-19, try to supply more jobs in manufacturing and exporting. And if they were to supply more jobs in those factories and those facilities, they'd be able to export more, causing the trade deficit to decrease and hopefully balance out to a better level. And hopefully the other countries like Germany and Italy, after COVID-19, hopefully their demand will increase once again when people get back on their feet. As for the taxes, they definitely need to adjust their tax system and unemployment rates. In this way, they could increase consumer consumption also to increase their growth rates and their overall GDP. And in doing so, they could possibly lower the unemployment rate, as employers won't have to pay as much taxes, and neither will employees. And that's all. For some of the references, here are some if you guys wanted to check out the websites. But other than that, that's it. Thanks for listening.